All right, good afternoon, boys and girls. How are we doing out there? Welcome to Ready, Set, Live. For today, Wednesday, the 29th of July, Fed Day is going on right now. Oh, joy. Good afternoon, everybody. Welcome aboard. We're going to see if we can sweep some folks into here. We're just emailing out now and letting everybody know that we're live. We're going to be spending the next I'd say 20 minutes or so going over the 5 points and the trade of the day. So without further ado, let's get into things. Welcome aboard. Again, my name is Doc Severson. I'm with ReadySetTrade, Ready Set Crypto. And we got, let's see who we got out there. Koobsicle, we got Juggeroms. What's up, what's up? How's everybody doing out there? Coming to you live from Greenville, South Carolina. We are about to get nailed with some storms right now. So if I cut off, if a tree falls on the power line, you will know what's going on. This realities of today's world. Let us know where you're coming in from today while I get things kicked off. Okay, so welcome to our live trade of the day session. We're going to run this on a weekly basis. If you caught last week's, here you go. Thanks for coming back again. We'll do this every week as long as you guys get value out of it. All right, Stephen from Lake Tahoe. Michelle could be either high or Hawaii. All right, in today's session, this is what I'm going to go over. The Fed is wrapping up the session right now. They're wrapping up their meeting. What changed in the policy statement? What changed in what's going on? All right, Caleb, good to see you from Jolly Old, or Old Blighty, whichever way you want to say it. What are equity markets likely to do now? Have a small equities account. Do this today. Hey, Kieran, west of Ireland. Outstanding. Digitex Futures Exchange mainnet launch is this Friday. And then we'll wrap things up with letting you know what I see happening in the crypto market and then the trade of the day. Like I said, we're going to be here for maybe 20, 25 minutes. If you have any questions, we can take those at the very end. Meant to keep things short, tight, and wrapped up here. So before further ado, let's get into point number one. The July Fed meeting is going on right now. Jerome Powell is probably giving his press conference and going through the usual list of questions. It's wrapping up. Did anything change? Is anything going to change? No changes in the discount interest rate. That's not a surprise. They are staying supported with bond purchases. If you could imagine, Jerome Powell stepped up to the first tee, pulled out his driver, and hit one right down the middle of the fairway. There were no surprises in what he said today. There's a 100% chance of rates staying the same until next March. Nothing is going to change. So, to me, this means the Fed is out of play. Here's what they changed. You can see some of the verbiage that they've changed here. Employment picked up somewhat, blah, 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 blah. The path of the economy will depend significantly on the course of the virus. Hello, that's a real stretch. So goes the virus, so goes the economy. The Fed's essentially out of the picture right now. It's not that they don't have more that they can do, but right now they don't want to do anything more. They have been able to support the market. They're not necessarily supporting the economy, but the two are not the same. There's not much that they can do to incite animal spirits to get activity going back again. What are they going to do? Drop rates again? We actually have some yield curves showing negative rates coming up within a year or two, which is a little bit odd. And that may end up pushing even more capital into the markets. Right now, there's no lack of liquidity. For those of you that went through the 2008 financial crisis, that was all about a lack of liquidity. Markets were frozen. Nobody was lending money. It's not the problem today. It's all about certainty. It's all about the lack of certainty in today's environment. So the extension to that are what are equity markets likely to do now into the end of the year or maybe into November? Let's look at things empirically for a second. The S&P has rallied about 48% off the bottom. This has been And I said this way back then. I was like, there's no way that this is going to V-bottom. There's no, oh, I guess we're going to get a V-bottom. So far this has been an extraordinary V-bottom, and a lot of this has been due to Fed policy basically flooding the streets with dollar bills sitting out there at next to no cost. There's no choice. They have to do this. They have to put money into assets that are going to provide some type of return. Again, there's no shortage of money right now. So unlike most other crashes, unless like most other recessions where markets are just frozen up and just there's no velocity of money, that's not the issue right now. That is not the issue at all. So it's all about trying to find a home for this money. Lots are calling for the next crash. If you read any kind of opinion that's out there, everybody is like bearish, bearish, bearish. And all the market has done is just climb the wall of worry since that point. I don't currently share that opinion, although I would say what would be very healthy for the market is for the weekly chart to set up a pretty significant pullback, kind of like what we had back here a couple of times back near the latter part of 2019. We had some pretty significant pullbacks, and all that did was just stoke up negativity and lead to higher prices down the road. So even a complex, decent pullback at a higher time frame would be actually very, very good for this. It's going to feel absolutely terrible if and when it happens. More than likely will happen at some point here. And when it does, we can climb the wall of worry yet again. Yo, greetings. Good to see you guys on board. Welcome aboard. If you're just joining us here, we'll be here for maybe another 15, 20 minutes, just going over some points I see with the market, equity markets, crypto markets. It's all just part of the same piece of pie, right? Here's something I'm not seeing a lot of people talking about. So I've gone back years and I've done chart pattern studies. Or I should say I've been doing chart pattern studies for years. This is a broadening pattern. This is a broadening pattern, or megaphone pattern is another way of putting it. Notice how the volatility was very quiet back here into the end of 2017. Very, very quiet. Then all of a sudden, it's like something is just pounding on this thing, right? Just going up and down and up and down. This is called an undamped oscillation, that the more it moves, the more it spins out of control. It's almost as though, for those of you that have ever driven on ice and snow, you're driving straight down the road and all of a sudden you have to apply your brakes and all of a sudden the back end kicks out. So you counter steer in the opposite direction. Your rear end swings around the other way. And next thing you know, you're going down the street and it's doing something like this before you finally spin out. That's an undamped oscillation. This is what happens with that. That's the engineering nerd side of me that comes out. So to me, this is just volatility increasing on a realized basis. It's getting bigger and bigger and more unstable. And guess why it's happening? Because of all this money that's floating out there. Everything is being put into the stock market. And so it's almost like this high wire act that's sitting there thousands of feet off the street with way too much weight. Another way to look at it, it's almost like holding a very heavy weight at the top of a very skinny pole. You can balance it at the top of a very skinny pole, but don't let it move too far off center. Otherwise, the whole thing comes crashing down. And so more than likely is we'll end up, in my mind, hitting new highs before we hit new lows. But then when we hit new lows, that may be even worse than earlier this year. Okay, so prepare yourself for volatility. That's the one thing I'd like to say here. Now, it may be months away before we see that. Retail will be late to every trend change. So I want you guys to beef up on your skills to be able to identify trend change while it's happening and not wait for Twitter to inform you that you need to act differently. You know how that works. In the short run, apart from all the rampant liquidity flowing in the streets, I don't see what catalyst is going to overcome the massive amount of uncertainty going into November, our election here. So I think there's a very good chance that we have a repeat of 2016 where we just sort of went chop, 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 chop into the election. I think there's so much uncertainty going into election, a very, very good chance that we chop around in a range for a while. Wild card here is that markets love gridlock. A lot of this will not necessarily relate around the presidential election. I think from the market's perspective, they don't care which candidate gets in there because they're both known quantities. Much the same as the 2008 election did not necessarily upset the market at the time. It was a known quantity. What happens is if all of the seats of Congress, if all of Congress goes in one direction or another, that's bad, because what that means is that legislation tends to get passed much faster. And markets hate legislation. They love gridlock. So if you want a supportive market, then we have to have what's in there now. We have to have a mix of who's in power across the board. There's a chance that a vaccine might be the missing piece to the puzzle, right? But it's months off. There's no way we're going to have a vaccine into 2020 before it's commercially available, right? So it's all based on the speculation and the rumor as to whether or not it's going to be available. Markets are always forward-looking. Don't look at today's bad news and try to trade off of it. Learn to trade options. If you want to handle choppy markets, learn to trade options and make money with the choppy sideways markets. Okay, I'm particularly excited for you guys about this one. If you have a small equities trading account, you got to do this today. Several brokers are now allowing you to buy fractional stock shares. This is for those of you that have come up through the crypto ranks. And for a lot of you, quite honestly, the very first thing that you traded was crypto. And so you've been migrating over to the equities market lately because that's moving and crypto hasn't, although they're catching up today. But you can't really do much with the account because a lot of these things like Amazon, $3,000 a share, right? NVIDIA, $415 a share. What do you do with that, right? You buy, I bought a share of a company. That's great. Okay, so now what you can do is you can buy fractional shares, which is just like, splitting up your investments into Satoshis if you're into cryptocurrency. So this is great. This is very innovative. This long overdue to do something like this. So this is really cool. You can trade either in dollar amounts. You can say, I want to buy me $25 of NVIDIA, or give me $50 of Apple, whatever fractional share amount that runs into. Very, very cool. So it's very flexible with how they do it. Now, I don't know if they all, I took this right off of the Robinhood site. This is how Robinhood's doing it. I would assume that they're all going to be doing it the same way, but who knows? So check with your broker on how they do it. Why is this important? Guys, after talking for the last 15 years to students about trading, I would say the number one killer, and this is why I call rule number one of risk management, is to define your exits before you enter the trade. People enter a trade and then they go, holy crap, it's not working against me. What do I do now? And now you're trying to make a very difficult decision and you got a lot of emotion running off of it. This is why the number one account killer is not putting in your exits before you enter. And then hoping that you're going to somehow grok the right intuitive way to exit that position. This is what doesn't work. Number two, though, right behind it is trading positions that are far too big for your account. And I just see this again and again and again. This is going to help you. So no one position should create more than 2% risk to your account balance. Now listen to what I say this, 2% risk, not 2% utilization. So a lot of people think that I'm saying, oh, wait a minute. What does that mean? I can't trade a position bigger than 2% of my account? No, 2% risk. And people don't know what risk means because they've never defined it before, because they've never set a stop loss, right? So learn how to split up, slice, and dice your account. So a lot of people will start off the discussion with saying, I have $2,000. What should I invest in? Split it up, right? Diversify. So now you can do it much more easily than before, where you had these big unwieldy shares of things that you maybe could only buy one share of, and it would hog a lot of capital in your account. Okay, now we're going to switch over to the crypto markets. Digitex Futures Exchange is going live on their mainnet on Friday. Finally! Digitex will be the only crypto futures exchange with commission-free trading. I should say the only futures exchange with commission-free trading. We brought this to the market's attention about 2 years ago. If you want to, you can find our channel. You can go back about 2 years ago, and I did a whole session, a whole interview session. I thought it was the greatest thing I'd ever heard of, and we did like a 40-minute video on Digitex and why it was great and why it was going to change the world. And here we are 2 years later. Finally, we have it. Okay, we've been waiting somewhat impatiently for this. So being able to scalp one tick in the futures market without the friction of commissions has been a dream of every trader. So what does that mean? Okay, this is a screenshot of the exchange. So if you've never done something like this before, and if you're just joining us, welcome aboard. This is Doc Severson here with Ready Set Live session for Ready Set Crypto and ReadySet.trade. Here are the prices on the ladder. This is a ladder interface. You may not have never seen something like this before. Usually you've got these big buttons that are up here like this, and one of them says, sell, and the other one says buy, right? Big green and red buttons, buy and sell. Well, that is so cumbersome, because if you have to actually change the price of these things, markets move so quickly. So you're sitting here fumbling around trying to put in the price, and meanwhile the market's off and running. This is a ladder interface. And once you trade with a ladder interface, you'll never want to go back to anything else again. So if I want to buy something, I'm going to sit on this side of the ladder. If I want to sell something, I'm going to sit on this side of the ladder. These are the bids. These are the offers. Don't worry about the names or anything right now. So if I want to do a limit order for the price being maybe 11,235, if I want to maybe sit down here and say, look, I don't want to buy until it comes down to this level at 11,220. Maybe I've determined that that's a support level or something like that. So I'm going to buy it at this level, and then what I'll do is I'll simply put in a sell order up here. So if I buy down here, I'll put in a sell order up here, or wherever it ends up being. And then what I'm going to do is I'm going to gain the difference between my entry, or in this case, the entry down here, and what I sell it for up here. Okay, that's simple. And then I can turn around and do the exact same trade. I can sell to open. And if the price is going down here, then I can buy to close down here. So this is a bi-directional type of arrangement, right? I'm not just long only. I'm not just short only. I can be flexible. I can flow with the market depending on which way it's going, whether it's going down or whether it's going up, right? So trade with that trend. So this is what a futures ladder looks like. And also they've got some important things like stop markets and stop limits. And this way you can set your risk on here. It's not just a scalper. You can actually trade swings with this, walk away, and you've got a totally protected offer or a totally protected order in place. Okay. And right now it's just BTC USD, but they plan on doing more assets than that. So once they get this up and stable, you'll see other top 5 futures assets, and then maybe even index futures like the S&P or the Russell or the NASDAQ in there as well too. And that is going to be truly transformative. So if they're able to do this, if they're able to deliver stability in not only the exchange, but the other end of the equation is the trading currency, right? So at Digitex, the utility token itself varies around too much, then this is going to defeat the purpose of the trade. If they're able to stabilize that, then this will be a paradigm shift for futures and bot trading. Imagine bot trading on something that's free. Okay. So what I would recommend that you do, it doesn't cost anything, right? Does not cost anything to sign up for an account. You can go in and play with a testnet with a whole bunch of tokens. So go in there, sign up, get on the testnet, learn to trade this thing. It's very simple. Sign up for access, start trading, and then on Friday, you can fund it and get moving. Okay, so we'll finish up here. What's happening in the crypto market? Well, good stuff, right? Bitcoin and the top 10 are breaking out. Last week when we met, last Wednesday, price was sitting down here, and I was like, okay, this thing's going nowhere. Range contraction leads to range expansion. This is what we always talk about. So they're breaking out, and Ethereum is up 33% in a week. And this was a beautiful little inverted head and shoulders pattern that actually delivered way more than the expectations are. So this is very nice little base, range contraction, range expansion. So I would expect to see more contraction in at least the near future of these as they kind of catch their breath, which is what we want them to do. We don't want them to just go unimpeded to the upside without some type of pullback, which builds up the negativity and keeps a trend going. You want that negativity. You want those bears to get involved and to get overcommitted. However, altcoins versus BTC are getting pounded because of the cost basis, right? So, I mean, this is Tezos versus BTC. It's getting drilled, right? So if BTC is launching, you don't want to be going into altcoins. You want to be going into dollar-denominated assets. So everyone remembers 2017, fondly in the altcoin boom, but for now, stick with the dollar-denominated assets like that you can buy through Coinbase or the top 10, especially BTC and Ethereum are strong. Also, sell puts against strong assets that have options available. So if you're in different parts of the world, you can use Deribit. If you're in the United States, you can use LedgerX. I'm hoping that these offerings will strengthen with increased activity, and we will have new offerings, which may even hit the larger exchanges down the road as well, too, increasing liquidity and making that edge available just about everywhere. Okay, so that's our top 5. Now we're going to get into the trade of the day, which is what I posted this morning. Now, this is a very contrarian trade. Why on earth would I go against Apple? So Apple, what I'm looking to do here, and in fact, what I should probably do is bring up a price chart. Let's bring up a current price chart on Apple. Now, they are going through earnings tomorrow. So tomorrow after market. So I wanted to put out this trade of the day today so people would have a chance to kind of assimilate it and see what's going on. So if we go to Apple, what I'm saying is that I'm expecting to see some type of a price spike to the upside. Some type of a price spike to the upside. Like Apple comes out with their earnings, boom, okay, spike to the upside. I want to sell into that. Now, if you want to sell into that with 100 shares, you're going to need 40 grand if you're going to do a short stock position. And I hate short stock positions because if you hold it through a dividend, guess what? You get to pay the dividend. Also, short stock positions have unlimited risk to the upside. Are you kidding? What are you doing, shorting Apple? No, this is a trade. What I want you to look at is every time that Apple has reported earnings over the last year or so, we've had a spike up and then it gets faded back down because the same thing keeps happening, because retail chases it up to the announcement and then it gets faded back down temporarily. So here's another one, gets faded back down. Here's another one, gets faded back down, gets pumped up and gets faded back down again. What do you think is going to happen here? We've already pumped this thing up. What I want to do is I want to see this thing hit 400, and it may not happen tomorrow. It may happen Friday. It may happen next week. But as soon as it hits 400, which is the prior resistance level at this point, As long as it happens within a day or two, then I think what we do is we go over to the options chain, and probably a 14 August. We don't need that much time. And all we have to do is, and this also is going to have to be when it gets up to about 400, but we're going to be buying the 400 put and then selling simultaneously the 397.5. So this limits our risk, should be about $1.25 or less than that by that time. So it limits our risk on the trade to no more than about $125 per contract, which is significantly less than if we just even bought the put. Right now, the at-the-money puts are going for over $1,000. So for all you guys that want to just do puts and calls, it's prohibitively expensive to do that right now on Apple. But if you learn how to do spreads, you can do that at a fraction of the cost. You can take a contrarian trade, get some value, take the other side of the herd on the trade, and have a little bit of fun with earnings without doing the same thing as everybody else. Okay, my friends, that is all I have for today. If you want tomorrow's trade of the day, you're welcome to join us over here at ReadySet.trade/free. So just put your email in there. We promise not to spam you. We'll take good care of your email address. We'll sign you up for a $100 a day trading course and add you to our Discord where all the cool stuff happens. So this is where the trade of the day occurs and all the other discussion. So we don't pound people. We're not going to market to them like some other people do. So we just want to build a community out there of like-minded folks at ReadySet.trade on our Discord. Okay. So unless you have any other questions, I'll stick around here for a couple of minutes. We've come in on time. It's near the bottom of the hour here. Got about a half an hour left for the market before the closing bell, and then we'll wrap it up and look forward to Thursday. Lexus is asking, can we expect a pullback on BTC? I would like to sell some puts. If I only knew, let me get my, who was that? Was that Sauron or Saruman who had that globe that he'd be able to see things into the future and stuff? I've misplaced mine in the move. I don't know where it is. So I don't trade based on trying to understand what's going to happen in the future, although it would seem differently like that. All I do is I trade based on probability. So I think the probabilities are such that, yeah, you might get some type of a pullback. More than likely, you'll get some type of a sideways consolidation. Corey, I don't know what CRPT is. So I heard you say not to trade into alts, but would you recommend trading alts at all? Yes. Okay. What I was saying is hold off. While the top 10 is going crazy, especially Bitcoin is going crazy or Ethereum is going crazy, don't trade alts against them. Wait until they consolidate. And then it's almost like a baton handoff at a relay race, right? If you have your Ethereum or your BTC, which is, if you have a coin, if you have an altcoin, and if you're trading versus BTC, if you're using BTC to purchase that, then basically what you're doing is you're shorting BTC on that pair. And so you've got to wait for it to be stable or maybe even heading down before you enter. Otherwise, you're going to crush yourself with this. So anytime you trade altcoins, wait till you have a stable arrangement, which is why it's always preferable to trade something versus the USD, which is a lot simpler to trade with. You don't have to worry so much. It's much more stable. Okay. All right. I think we're good to go. Thanks everybody for joining me here today with Ready Set Live, and we'll see you guys next week. Adios, amigos.